All right, so here's day 10 of my stock market portfolio journey to $500,000. All right, so let's look at my equity in my margin account. That's usually the first thing I look at. So it's slightly up to 6,200. And then my TFSA, it's 41,074. And then my RSP is 17,552. So it's a total of 64,844. So I'm recording this video on Tuesday, August 20th. But I'll be uploading it Wednesday, August 21st. But I'm going to talk about the trades that I made on Monday and Tuesday, August 19th and 20th. All right, so if you recall, I placed a put credit spread on the SPY expiring September 13 at I sold the 275 put strike and I bought the 270 put strike, and I collected about $95. So yesterday on Monday I closed that trade for about $35. So I sold for 95, I bought back for 35. So I've made the difference in profit in a matter of week. So 95 minus 35, and then if we remove commissions, it's going to be about $12 in and out. So $48 while risking $405. So that's 11% in 1 week. Yes, it's a small amount, but it's the idea. It's a concept. 11% in 1 week without buying any stock, simply by assuming that by September 13, the SPY will be above 275. And as soon as the trade started showing me a decent profit, I closed the trade early just to get rid of risk. Because you never know what could happen with this market. Come September 8th, it could just drop hard below 275 and I make my maximum loss of $405. So I'd rather confirm my profit, because from experience, the market can be crazy. So I had a bunch of a bunch of call options that expired worthless. So now I have a lot of stocks that are waiting for call options to be sold against them. So one of them was Dell. I sold a call option at a 52.5 strike for expiring September 20th, collecting $1.60. So that's about a return of $1.60 divided by 52.5. So it's about a 3% return in about 4 to 5 weeks. So let's say in 5 weeks times 52. So that annualized gives me a 31% return. And then I sold a call option on Bristol Myers as well, 50 being my strike, only collected $36. So this one's going to be pretty low. So it's going to be 36 divided by my cost of 5,000. So that's not even a percent. In 5 weeks times 52, annualized at 7.4%. So you could see it as a good dividend. But the problem is Bristol Myers is in my margin account. So I'm actually using borrowed money for this trade. So I'm paying interest on this. So I need to make more than 7% per year for this to make sense, or else I'm just breaking even. SNC as well is a stock that I had. This stock I bought at 21.75. I sold a call option the first month at a 22 strike, collected about $85. And then now it's trading at 16 or 17, but I want to stick to my same strike. So I stick at a 22 strike, I was able to collect $25. So obviously it's much less than the $85 I was able to collect the first time, but it's still 25 divided by 21.75. It's still 1.1% in, this one's expiring September 20th, so in 5 weeks. So divided by 5 times 52, it's about 12% per year. So I also closed the NVIDIA trade early. So if you remember on Friday, August 16, I rolled over my call option that expired August 16. I rolled it over to August 23rd, collecting about $205. On Monday, so instead of waiting till August 23rd, I was able to close the trade early on Monday, confirming a profit of $185. So either I wait till Friday to confirm my profit of $205, or I close the trade early for $185 on Monday. So I chose that option instead of waiting 4 days for an extra $15 or $20. I closed my trade early for $185, Plus I get my money back. So I got more buying power to do something else with it. Today, so August 20th, on Tuesday, I closed my Tesla Iron Condor. So if you remember, I had an Iron Condor on Tesla that expires August 30th. I collected $125. For me to keep the full $125, I needed Tesla to stay between 260 and 205 come August 30th, which is in 2 weeks. But I was able to close out the trade early for about $35. So I collected $125. I bought it back for $35. So I keep the difference of $90. So 125 minus 35 is $90. The risk or the investment or the capital required for this trade was about 500 minus 125, so 375. So 90 divided by 375 is 24%, and this is in 2 weeks, 2 to 3 weeks, 24%. So this is a decent profit. Actually, let me remove the commission. So it's 90 minus $16. So it's a $74 profit on a 375 investment. So about 20%. Actually, I'm not sure if I collected more than $125. So it's this trade here, April, the one I placed July 29th actually. So these 4 trades here. So 261 minus 194 plus 379 minus 301. So it's actually $145. So I collected $145 from selling that Iron Condor on Tesla, and I closed it out today for $35. So that's $110 profit minus the commissions of $16. So that's $94 in profit on an investment of $355. So that's 26% from July 29th to August 20th. And without having to guess necessarily the direction of Tesla, I just needed Tesla to stay between 260 and 205. So basically the fact that it didn't move that much, it stayed between 220 and 240, I was able to close out the trade early. So one thing I learned is if you have a decent profit, if your trade shows a decent profit, you should close it early because you don't want to stay involved in the trade too long, because anything can happen and then you're actually adding to yourself more risk. There's no real benefit to staying an extra week or 2 weeks to make an extra $35, but you could be losing $300. So basically, if I had waited till expiry date, I would have saved the $35 I paid to close the trade plus the commissions I paid to close the trade. But I did that to avoid the risk of losing $355. I still end up with a decent profit. Also today, I closed a Netflix call credit spread. So this was part of an Iron Condor I did on Friday, August 16. This is part of a trade that I'm just trying to fix. And then when Netflix dropped today from 306 to 300, this call credit spread that expires this Friday, August 23rd, showed me a decent profit. So I just closed it out early to avoid the risk of losing max loss. Max loss would be achieved here if Netflix was trading above 315 come August 23rd. I'm not sure what's going to happen. Netflix can move 10, 15 points in one day. So I decided to close it early when it was showing me a decent profit. But now I still have this put credit spread on Netflix, which expires August 23rd. I need Netflix to be above 310. So basically I needed Netflix to be above 310 last week on Friday. I gave it an extra week, thinking that for sure if it has one more week, it'll be above 310. But yesterday it was at 311 and now today it's at 299. So really it doesn't make sense. But I need this trade to be above 310 for me to keep whatever I collected from it, or else I'm gonna have to buy it back and roll it over to the next month, and it's gonna cost me money. So this is the downside of Iron Condors, is when the stock goes outside of your range, it becomes really annoying to manage. So another trade I placed today was Zillow. This one is a cover call trade expiring September 20th. So I bought the stock at 35.23, but I sold a call option at a 34 strike, collected $2.58. So that's actually, I gave myself some downside protection there. So my true cost is 35.23 minus the premium that I collected. So that's my true cost. That's what came out of my account today, 32.65 for me to own 100 shares of Zillow. My max profit though, if Zillow trades above 34 come September 20th, my max selling price is 34. So 32.65 minus 34 is $1.35. So that's my max profit. But $1.35 divided by 32.65 is 4.1% in 5 weeks. So divided by 5 weeks times 52 is 43% per year. So I think it's a good deal, because I don't know what's going on with Zillow. It took a major drop, so for that reason, I felt like it's a good time to buy the stock, because most of the time what happens is when a stock drops hard, it tends to go back to its average trading price. So I'm going to assume it's going to go back up, but if it doesn't, I give myself extra protection, because my cost is only 32.65 instead of actually being 35 when the stock is trading at 35. And if it goes up, well, I make a profit. If it stays still, I keep the shares and I just sell another call option the following month. So yeah, so that's the trade I placed today on Zillow. And then on Monday, I sold another call option on Mattel, collecting 35 cents per contract on a cost of 11.5 or a strike of 11.5. So basically, actually my cost was 11.10. So basically I collected 35 cents divided by 11.10. So that's 3.1%, expiring September 20th. So that's in 5 weeks. So 0.35 divided by 11.1 being my cost, 3.1% divided by 5 weeks times 52 gives me an annualized return of 32%. But as you can see, I still have some positions here that don't have a call option, that are a call option sold against them. I'm still giving them a chance to go back up so that the call option I sell is higher. Neo, for example, Teva, Macy's. I have 200 shares of Macy's in my TFSA, but I have 100 shares of Macy's in my margin account. So I made a request with Questrade to transfer my 100 shares from the margin account to my TFSA so that I have 300 shares together. So this way I can save on commissions when I sell a call option. Halliburton, I want to give it a week. I need it to go like maybe 20. I need it to go to 21, 22, and then I can sell a call option at a 23 strike. I also have FCX and CHK that I'm just waiting for them to go a little bit higher. If not, I'm just going to have to sell a call option against them regardless of what I get for it, because I don't like to keep my stocks without a call option sold against them, since my strategy is covered calls. American Airlines, same thing, waiting a little bit. Goodyear Tires, Kraft Heinz, and this is the Macy's that should be transferred over to my TFSA. Uber, looks like I'm gonna have to. I'm giving it a week as well. If not, I'm gonna sell a call option at a 40 strike, collect whatever I collect. Today I would have been able to collect about $25. Same thing for United States Steel, just waiting a little bit, then I'm gonna sell a call option against it. All right, so that was my day 10 portfolio. So if you have any questions, any suggestions, leave them in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.